We're diving into 3 stocks that are not only trading at a discount, but are showing signs of strength, making them serious contenders for your portfolio. We'll break each one down in terms of historical performance, current market structure, and profit potential. So let's jump right in. First up, we have eBay, ticker EBAY. eBay has a market cap of $30 billion, making it the 656th most valuable company in the world. Founded in 1995, it didn't go public until September the 24th, 1998 at $18 per share. Since then, it's climbed over 8,300% to its current all-time high of $81.19. And yes, that's the stock split adjusted price. eBay has had 5 stock splits over the years, most recently in July 2015. Now, here's where it gets interesting. Since hitting that all-time high, eBay fell 56% to October 2022's low of $35.92. But here's what makes it really interesting. It then formed a base or consolidation until February 2024. A base is what we want to see when a strong company is going at a discount, and is also a key signal for us when we're looking to buy a stock. A base is where the next major uptrend usually starts from, so identifying them is essential. In March 2024, it broke out from that base and has climbed around 25% to its current price, proving our point on uptrends starting from bases. So what makes eBay a good cheap stock to consider? First off, its price point makes it an affordable stock for your dollars. It's trading back above the daily 200 simple moving average, giving the stock a bullish bias overall. And it's already working its way back up after moving out from consolidation. So it's already moving in the direction we want, back towards its all-time high. Now, let me share a little pro tip about buying low and selling high. This strategy is often pushed as the popular way to buy stocks, thanks to investors like Warren Buffett putting it in the limelight. But here's the challenge. Stocks that are dropping will often continue dropping until market forces confirm a change in direction to the upside. This can mean weeks, months, or even years of waiting after you've purchased the stock, leading to lengthy periods with no growth. In fact, just getting back to break even can prove to be a challenge. But eBay is different. It formed a base at a discounted price from its all-time high, broke out from that base, moved above the daily 200 simple moving average, and is now gathering momentum towards its current all-time high. This is exactly what you want to see when buying stocks at a discount. Okay, let's apply that same logic to our next discounted stock, Broadcom, ticker AVGO. Broadcom is a semiconductor company based in San Jose, California. It was originally the semiconductor product division of Hewlett-Packard and later Agilent before its spin-off. With a market cap of $762 billion, Broadcom is the world's 11th most valuable company by market cap. That's some serious business. AVGO had its IPO in 2009 and it was a big deal, the second biggest in the US that year, raising $648 million. Since then, it's been on quite a journey. The stock has climbed almost 11,500% since its IPO to the current split adjusted all-time high of $185.16. And speaking of splits, it went through a recent 10-for-1 stock split in July 2024. Note how this stock's 10-for-1 split did not get the same attention as Nvidia's 10-for-1 split in the same time period. The media likes to focus you on what it wants you to see, not what you need to see, and why a systematic approach to stock picking and investing is an absolute must. Here's where it gets interesting for us as potential investors. After hitting that all-time high, Broadcom declined 30% in July and August to $128.50. Since then, it's been using the daily 200 simple moving average as support to bounce off, currently forming a base or consolidation. Now, as already mentioned about bases, this is an excellent sign. Consolidations are healthy and form a base from which the next sustained uptrend can emerge from. These periods of trend can last 12 to 18 months or even longer. You might be tempted to enter at these current prices while it's in consolidation. But here's a word of caution. The stock can remain in consolidation for months until the breakout, meaning your risk is tied up for long periods of time without any real growth. This is the one downside of buying a cheap stock that's still in consolidation, unlike eBay, which has already broken out and is moving towards its all-time high. Personally, I'd rather wait for a breakout and new all-time highs before considering a position on Broadcom. Its history shows that it can trend for long periods, so when it does break out, it will likely target $500 at $100 increments. Patience is definitely a virtue with this stock. Now, let's move into our third and final stock, Chipotle Mexican Grill, ticker CMG. Chipotle has a market cap of $76 billion, making it the world's 237th most valuable company. Now, I'm sure you're familiar with Chipotle's burritos and tacos, and you might know that it was founded in Denver, Colorado back in 1993 by Steve Ells. But here's something you might not know. Chipotle had a massive 50-to-1 stock split in June this year, the first stock split in its history. Before the split, it was priced at a whopping $3,200 per share. If you ever wondered how high a stock can go, well, think of Chipotle. And just to put that into perspective, Warren Buffett's Berkshire Hathaway Class A shares are now trading at an incredible $700,000 per share with no stock splits. Mind-blowing, right? Chipotle's stock split came just days after its all-time high in July, which split adjusted is around $70. Since then, the stock declined around 31% to about $48. It then moved into a consolidation between $48 and the August high at $57 before the breakout in mid-September. As we saw with eBay, a consolidation is ideally what we want to see once a stock is trading at a discount from its all-time high. Chipotle has now also moved back above its daily 200 simple moving average, which is another positive sign. Remember, stocks above their daily 200 simple moving average have an overall bullish bias and are likely to continue moving up. What I particularly like about the eBay base is that it lasted 5 to 6 months. As the saying goes, the longer the consolidation, the bigger the breakout. This current consolidation on Chipotle is only around 5 weeks, but it's still a base nonetheless. This breakout, a move above the August high, will likely prompt a move to the current all-time high of around $70 from July. When looking for discounted stocks, don't just focus on the current price. Look at the stock's history, its market structure, and its potential for future growth. A stock that has formed a base after a decline and is showing signs of breaking out like eBay can be a great opportunity. Stocks in consolidation like Broadcom and Chipotle can also be good opportunities, but require more patience. Remember, the longer the consolidation, the bigger the potential breakout. Always consider the stock's position relative to its 200-day simple moving average. Stocks trading above this level tend to have a bullish bias. Don't be afraid of stocks that have had a significant growth in the past. As we've seen with all three of these stocks, past performance can be an indicator of future potential. Another stock going at a discount is Palantir. It's been attracting a lot of attention for its potential to rise quickly. It recently bounced back from $30 and surpassed last month's high. Now, while still below its all-time high, Palantir has shown strong signs of upward momentum with an over 100% increase so far this year. It might soon surpass its January 2021 record high, and you want to be on the right side to catch that move. Watch this video for a detailed analysis of this stock so that you can catch this stock while it's still going at a discount.